Today we are going to start with the new chapter called retirement of a partner, right? So in case of retirement of partner, so the concepts that we studied in admission of a partner are somewhat similar to retirement of partner as well. If you remember, in admission of a partner, I'm writing down here what we did in admission of a partner and what we supposed to do now in retirement of a partner. We know what is the admission of a partner. So when there are, for example, that there were two partners, they were running this business from last 5 or 10 years, and new partners coming into the business, and that is nothing but the admission of a partner, right? So on occasion of admission of a partner, so because of the entry of new partner into the business, the two partners which were old partners needs to sacrifice towards that new partner, right? So in case of admission of a partner, we supposed to calculate sacrifice ratio, sacrifice made by old parties. Then we have to calculate new profit sharing ratio as well, right? That we studied in admission of a partner. Now what happened in the retirement of a partner? For example, there were three partners, A, B, and C. So partner C is retiring from the partnership from business. He is no longer will be the partner in the partnership from business, right? So on occasion of retirement of a partner, we have to calculate what? We have to calculate, first of all, gain ratio. We have to calculate gain ratio. So what does it mean? So for example, so before retirement of a partner C, A, B, C, three partners enjoying profit sharing rate equally. For example, if they earn 3 rupees of profit, then A will get 1 rupee of profit, B will get 1 rupee of profit, and C will get 1 rupee of profit. Right? Now, if C is going out of the business, he is retiring from the partnership of business, then C's share will be enjoyed by partner A and B. Yes or no? So the C's share in the profit will be shared by A and B, and that is nothing but so their gain. So again, if suppose now partnership firm is earning 3 rupees of profit, right? So earlier 3 rupees of profit get distributed between A, B, and C equally. 1 rupee for A, B, 1 rupee for B, and 1 rupee for C. If partner C is not there in the partnership firm business, he is going out of the business, then that 1 rupee of profit, right, which we supposed to, or which we distributed previously to partner C, so partner C is no longer available in the partnership of business. So that 1 rupee profit we can give to A and B, right? So that is the thing. But in the case of retirement, partner A and B are going to enjoy the benefit, and that is nothing but the gain, right? So we have to calculate gain ratio. Secondly, we have to calculate new profit sharing ratio as well, right? So if partner C is going out of the business and his share is enjoyed by A and B between themselves, then their profit sharing ratio will change. So we have to calculate new profit sharing ratio as well. Now, so in case of admission of a partner, we did some goodwill adjustment. If you remember, goodwill adjustment we did in case of admission of a partner. Sir, if that new partner is not coming any goodwill sharing to the partnership from business, then what we have to do? So we have to calculate goodwill, right, of the partnership from business. If it is not available in the question, then we have to use a formula for goodwill calculation. We have to calculate goodwill, and we have to do adjustment entry. We have to pass adjustment entry to partners capital account, right? Sir, there are two partners who are sacrificing. For example, in admission of a partner, A and B were the old partners, and now C is coming into the business. So now for this new partner C, A and B are sacrificing, right? So in order to compensate for their sacrifice, C needs to bring goodwill into the business, right? So in that scenario, whenever goodwill adjustment is there in the admission of a partner, so we have to debit new partner's capital account, and we have to credit sacrificing partner's capital account always, right? New partner's capital account we have to debit, and we have to credit sacrificing partner's capital account. So we have to give a money to sacrificing partner. We have to increase their capital, right? Because they are suffering because of the entry of partner C. Now it is an exactly opposite concept in case of retirement of a partner. In case of retirement of a partner also, we have to do goodwill adjustment. In case of retirement of a partner also, we have to do goodwill adjustment, sir. Right? In this case, you have to tell me, Sadhna, Shivarish and Parthsarthi, who are the gaining partners and who is the sacrificing partner in case of retirement? Who will be the gaining partner and who will be the sacrificing partner in case of retirement of a partner? Sir, in case of retirement of a partner, so this partner A and B, who are continuing partners, become my gaining partners, right? And the C partner who is going out of the business is my sacrificing partner, right? Because his share of profit will be enjoyed by A and B now, right? So in case of retirement of a partner, old partners are gaining partners, right? Both partners, both the old partners can be a gaining partner, or any one partner can be a gaining partner, right? So old partners are gaining partner here, and mostly sacrificing partner is nothing but your retiring partner. So retiring partner will be your sacrificing partner. Retiring partner is your sacrificing partner, right? So this is you can say this situation you will be, I mean to say here, most of the cases old partners are gaining partner, both the old partners are gaining partner, and 100% sure it is that the retiring partner is always a sacrificing partner, right? So in case of retirement of a partner, when you are doing goodwill adjustment, you have to debit. See, always you have to debit gaining partner's capital account, and you have to credit sacrificing partner's capital account always, right? In case of retirement of a partner, or you are solving or you are passing journal entry for adjustment of goodwill, even in case of admission of a partner, wherever you pass journal entry for, or wherever you are giving adjustment effect for the goodwill, you have to remember that we have to debit gaining partner's capital account always, and we have to credit sacrificing partner's capital account, right? So I'm writing here, so we have to debit gaining partner's capital account, and we have to credit sacrificing partner's capital account. So what is logic? So logic is simple. So the partner who is a sacrificing, we have to increase his capital, and the partner who is a gaining in the future, so we have to adjust his capital balances by reducing his capital balances, right? That is the thing that we have to remember here. Okay. So after this, so if you remember, in admission of a partner, fourth one, we transfer accumulated profits, reserves and losses, right? We distributed accumulated profit, reserves and losses to old partners in their old profit sharing ratio. If you remember, so before entry of new partner C, whatever profit is available in the balance sheet, that is known as accumulated profit, that can be reserves and losses. So we have to distribute same among the old partners as per their older profit sharing ratio, that we did in case of admission of a partner. So same logic or same adjustment we have to do now in case of retirement of a partner also. But only difference is, so whenever there is a retirement of a partner, we have to transfer accumulated profit, reserve, losses between or among all partners. We have to transfer among all partners. as per their old profit sharing ratio. See the difference? In case of admission, you are transferring only to the two partners, A and B, and not C partner because C is the new partner. In case of admission, but in case of retirement of a partner, both all the three partners, A, B, and C, are old partners, right? A, B, C were there in the business from last 10 years. And what is accumulated profit? So accumulated profit is nothing but profit of the business or profit earned by the business over a period of 10 years, right? So it means whatever profit is there in the balance sheet or whatever loss is there in the balance sheet is because of the efforts put it by all three partners together, right? Partner A, partner B, and partner C as well, right? So if partner C is going out of the business today, so even in that case, so this profit is related to last year, last 10 years. So we have to give it to the retiring partner as well. And that's why in case of retirement of a partner, whenever there is accumulated profit, reserve and losses are there in the balance sheet, we have to distribute them among all the three partners as per their old profit sharing ratio, right? Okay, so after that, we studied in admission of a partner another important concept, and which is related to, if you remember, which is related to revaluation account, right? We prepared revaluation account in case of admission of a partner. Revaluation account. So in revaluation account, we know, sir, we have to record on the debit side what? Tell me. On the debit side, we have to record expenses and losses, and on the credit side, we have to record income and gain, right? So whenever, in case of at the time of admission of a partner, whenever asset value get increases, it's a profit or loss for you. It's income or expense for you. So whenever asset increases, it's income for me, and we have to record, or we used to record on the credit side. So whenever asset decreases, it's a loss for us. Asset decreases, it's a loss for us. We have to record on the debit side. And it's an exactly opposite in case of liability. So if liability increases, it's a loss for me. We have to record it on the debit side of revaluation account. And if liability decreases, so it's a income and gain for us. We have to write down on the credit side of revaluation account. The same concept of revaluation account that we studied in admission of a partner is applicable in retirement of a partner as well. Same concept. Same concept is applicable. No change in that, right? So in case of admission of a partner, after closing revaluation account, you will be getting, sir, revaluation profit here or revaluation loss is there, and both revaluation profit and loss we have to distribute between old partners as per their old profit sharing ratio. Same logic is applicable in case of retirement of a partner also. So revaluation profit or revaluation loss we have to distribute between all partners, including that retiring partner, right? Between all partners as per their old profit sharing ratio, right? So these are the adjustments that we did in case of admission of a partner, and same way we have to do in case of retirement of a partner. These are the similarities. So now, so what is new thing in retirement of a partner? In case of retirement of partner, that we have to remember. See, I am writing here the new things that we have to remember. So now, in case of retirement of a partner, partner C, in my example, partner C is a retiring partner, right? Partner C is no longer in the partnership of business. He is going out of the business, right? So if partner C is going out of the business, then I need to calculate amount payable to the retiring partner, right? And I need to do I can say adjustment or accounting for the amount payable to the retiring partners. What I need to do calculate here, I need to calculate amount payable to retiring partner. So what I am going to pay him? So any retiring partner is there, to that retiring partner we have to settle his account by paying what? So simply by paying back his capital. Repayment of his capital. So we have to repay his capital balance. Then sir, we have to give him share in accumulated profit, right? Profit, reserve and losses. We have to give him share in accumulated profit, reserve and losses. So he was there in the business from last 10 years, right? So in the last 10 years, whatever profit firm earn, so that profit, in that profit, C is also a partner who put in his efforts, right? So he is eligible for his share in the accumulated profit. So that also we have to give. After that, so we have to give what? So we have to give him revaluation profit share also. Revaluation profit share, right? Then after that, we have to give him goodwill share as well. So whatever name, fame and reputation of the business is today is also because of the efforts of partner C also, right? So if partner C is going out of the business today, so it's a liability on the part of partnership firm to pay him his share of goodwill. So we have to pay goodwill share as well, right? So what we have to pay? We have to pay his capital back. We have to give him share of his accumulated profit, reserves and losses. We have to give him revaluation profit share, and we have to give him goodwill share as well, right? So what happens sometimes? Sometimes on the date of retirement of a partner, we are not making payment on the spot, right? Because sometimes retiring partner is, or the partner is retiring in the middle of the accounting year, right? So for example, my accounting year is April to March, right? And my current accounting year is 1st April 2023, 1st April 2023 up to 31st of March 2024. This is my current accounting year, right? And partner, C partner retired from the partnership of business on 31st of August 2023. He is retiring in the middle of the year only, right? So in such a scenario, sir, giving him his share in profits or settling down his account, it's not always possible, right? So in that scenario, we have to prepare one account, and that is known as deceased partner's capital account, or you can say retiring partners loan account also we have to consider sometimes, because we are not paying him entire amount. So if retiring partner is there and we are not settling his account, then we have to prepare separate account for that we have to pay amount to him. So whatever I'm discussing here, I'm just giving you overview of the adjustments, or you can say the concept that we have to see in detail one by one in case of retirement of a partner, right? And this is the end thing, or this is the last thing in the retirement of a partner that we have to do. We have to calculate amounts of share payable to the retiring partner, which comprises of repayment of capital, then share in accumulated profit, reserves and losses, then revaluation profit share, and then goodwill share as well, right? These three things or four things we have to pay to the retiring partner on the date of retirement of that partner. Understood, Sadhna? Pathsati? Okay, yes, Sadhna. Okay, so one by one we are going to discuss the adjustment. Right? First, we have to see now how to calculate the gaining ratio, and new profit sharing ratio that we have to see now. See here. So whatever written here, I have just covered that, right? So, and why the partner is retiring from the partnership business? So there can be reasons. So see here, a voluntary retirement is there. He is voluntarily retiring from the partnership business, or because of illness he is retiring from the business. Because of migration to another place, he is retiring from the partnership and business. Because of disagreement between among the partners, he is retiring from the partnership and business, or as per the agreed terms of agreement, or it is written in the agreement that after 10 years, partner C will retire, right? So n number of reasons will be there. Because of that, partner is going out of the business as a retirement. What are the adjustments that we have to do in case of retirement of a partner? So that I have just discussed with you. Now, So important thing here, we have to see one by one. First important concept, that is calculation of profit sharing ratio, new profit sharing ratio and gaining ratio, right? So what is formula for gaining ratio? The formula for gain ratio is new share minus old share, right? Gain ratio is equal to new share minus old share. And what was the formula for old share, sir? Old ratio, sorry, for sacrifice ratio. Sacrifice ratio is equal to old share minus new share, right? That was the formula for sacrificing ratio that we studied in admission of a partner. And in case of retirement of a partner, we have to calculate gaining ratio, and formula is new share minus old share. So we'll discuss one by one now how to calculate new gaining ratio and new profit sharing ratio on the occasion of retirement of a partner. See here, calculation of gaining ratio and new profit sharing ratio under different situations. So first situation is new profit sharing ratio is given. So first situation is new profit sharing ratio is given. So if new profit sharing ratio is available in the question, then how to calculate gain ratio? So formula is there now. So gain ratio is equal to new share minus old share. Simple. So if new PSR is given, I need to put only one formula. So gain ratio is equal to new share minus old share, right? So this formula if I use, I can calculate gain ratio. See the one example here with one question. See, Ranjana, Sadhana and Kamana are a partner sharing the profits in the ratio of 4:3:2. So I can say 4:3:2 is their old profit sharing ratio. So old profit sharing ratio of Ranjana, Sadhana and Kamana is available in the question. So 4 by how much? 4 plus 3 plus 2? Yes, 9. So I can say 4 by 9, 3 by 9 and 2 by 9. Ranjana retires. So who is retiring from the partnership of business? So Ranjana is retiring from the partnership of business. Ranjana retires. Sadhana and Kamana decided to share the profits in the future in the ratio of 5:3. So new profit sharing ratio available, sir. New profit sharing ratio between Sadhana and Kamana is given in the question, and that is nothing but 5:3. That is 5 by 8 and 3 by 8. This is the new profit sharing ratio available, and we have to calculate now the gaining ratio. So how to calculate gaining ratio? So we have to put this into the formula. What is formula for gaining ratio? So gaining ratio is equal to, tell me, new profit share, right? New PSR or new share minus
old share.
Old share, right? So what is new share for Sadhana? Sadhana's new share is 5 by 8, right? And what is new share for Kamana?
4 by
3 by 8, now?
3 by
3 by 8. Minus, we have to do old share. So what was the old share? 3 by 9 and 2 by 9. See here.
yes sir. 2 by 3 by 9.
3 by 9, 2 by 9. So we have to subtract 3 by 9 and 2 by 9. 3 by 9 and 2 by 9. How to solve this? So we can solve this by LCM or by cross multiplication. 9 5s are 45. Minus 8 3s are
24.
8 3s are 24. Divided by
72.
72. For Kamna, 27 minus 16 divided by
72.
What will be the answer here? 45 minus 24?
21 by 72.
21 by
72.
72. And for Kamana, 9 by 72? or 11 by 72?
11 by 72.
11 by 72. Sir, we know numerator is always our share, right? What is numerator? 21 here and 11 here, right? So my gaining ratio will be 21 is to 11. Yes, Arna, correct. Understood? Simple. So whenever new profit sharing ratio is given, we have to use only one formula, that is gaining ratio is equal to new share minus old share. Any doubt in these, Sadhana, Shivari, Partha? Okay, Partha. Yes, Sadhana, any doubt? Shivari, any doubt? Okay. So I'm moving further now. So next concept is new PSR is not given to you. So previously, new PSR was given. Now we are saying here new PSR not given. But if new PSR is not given, then how to calculate, sir? How to calculate gaining ratio? How to calculate new PSR, sir? Okay, we'll see. Sir, first option, only one partner gains the retiring partner share. Means they are saying there is only one partner who is a gaining partner, sir. Right? So only one partner is gaining partner. So if only one partner is gaining partner, then simply, so whatever share of that retiring partner is there, so that's retiring partner share we have to add into the share of that gaining partner. Simple, right? So we can easily calculate gaining ratio as well as new profit sharing ratio. See example, then you will understand. Serious question. A, B, C are the partners sharing the profits and losses in the ratio of 3:2. So there were three partners, A, B, and C, and their older profit sharing ratio is 3:2. It means 3 by 8, 3 by 8, and 2 by 8. So C is retiring from the partnership from business. C is retiring from the partnership from business, and his share is taken up by A. And C's share is taken up by whom? C share is taken up by A. C share is taken up by A, right? Calculate the new profit sharing ratio and gaining ratio of A and B. Okay. So first of all, I need to calculate what is the share of A partner now, right? So how to calculate that? So A share. Sir, I will be writing like this: old share of A plus share of retiring partner, right? So what was the old share of A? So A's old share were 3 by 8, and now he is getting 2 by 8 from C, right? Share of retiring partner. So that is nothing but 2 by 8. So what will be the share of for partner A now? So partner A share will be 3 by 8 plus 2 by 8. So that is nothing but 5 by 8, right? So now what about that partner B? So I need to calculate partner B share as well. So now I'm writing B share. So is equal to old share plus gain from or share from retiring partner, right? So B's old share were 3 by 8, sir. 3 by 8 plus, sir, is he getting some anything from partner C? Sadhana, Shivarish, his partner B is getting something from partner C? So answer is no. He is not getting anything from partner C, right? What I need to do? 3 by 8 plus 0. So answer will be 3 by 8 only, right? So 3 by 8 and 5 by 8. If they ask you, so what is your new profit sharing ratio? So what is your new profit sharing ratio? New profit sharing ratio is equal to, we have to consider numerator now, 5 and 3. So new profit sharing ratio between A and B is 5:3. 3. And what is your gaining ratio? The gaining ratio is 1:0. Yes or no? Because entire amount is enjoyed by whom? It is enjoyed by partner A. There is nothing to partner B. So gaining ratio is 1:0. Understood? Shivari, Sadhana, any doubt in this?
ஆகாஷே ஏதாவது கேட்டுருவான் கிளாஸ் நடக்கிறப்ப உள்ள வராதுன்னு இருக்கேன் போயிடு. ஏய்
Yes, Sadhana. Any doubt, Sadhana? Okay. Sadhana, what Shivari just now told in your language? He scolded on someone, I guess. Can you translate for me?
So nothing, sir. When he attending the class, he don't want anyone to interact with him.
Okay, so he is telling that to someone. Okay.
Maybe his brother or someone.
Okay.
what's
I am asking to Sadhana what you said in your language. So she's translated to me and she's saying, he said, please don't disturb me, I am in class.
sir? I have put the mic on.
What?
Am I shouted with the mic on?
Yes. No issues. Shivarish.
Sir, he's always interacting during the
Who?
class. My brother.
Your brother. Younger one or elder one?
Younger.
Okay. In which class he is?
Same, sir.
10th standard.
Yes, sir.
Okay. Understood these, Shivarish?
Yes, sir.
Okay, good. I am moving further now. Sir, just I am summarizing what we did so far, right? So, the first case is new profit sharing ratio is given. So, whenever new profit sharing ratio is given, you have to use only one simple formula for calculation of gain ratio. So, gain ratio is equal to new share minus old share. That's it. Then we discuss about second category when new PSR is not given. So under new PSR is not given, we just now studied first scenario, that is nothing but only one partner is gaining partner, right? Is gaining partner. Sir, what to do? Sir, in such scenario, we have to consider old share at old par plus we have to add share or sharing part, right? Then we can calculate the profit sharing ratio is just studied. Now my word. See, so here at point PSL is not given. Key case there. More than one partner against the retiring partnership. So now it is different thing. For example, 3 partners there, A, B, and C. C retiring your partner from business, right? And the remaining part A and B both are gaining. See the first case. That the proportion of share again retiring partnership given. Sir, in which proportion A and B is going to gain? The retiring partnership share is given. I'm saying, sir, for example, if retiring partnership share is 1/3, so 1/3 will be shared between A and B. That's for sure, because both are A partners. So the proportion in which they are going to share this 1/3 between them is given in the question, right? So in that scenario, what to do? What will be the formula? New share of continuing partner is partner A and B is equal to old share plus share gain. Right? Old share, and in that share we have to add their share again. But sir, we are calculating their share again, and that is important. So how to calculate share again? See, share again equal to retiring partner share multiplied by proportion of share gain. Right? So whatever proportion is there, for example, they are saying they are going to share the ratio is 1. That is proportion 1 by 2 and 1 by 2. So that we have to apply over here on retiring partner share. So that's the formula is retiring partner share multiplied by proportion of share gain, and you can easily calculate share gain. So I'm going to
yes. They didn't give the
proportions.
sharing ratio means we have to assume it is old ratio, sir.
Yes, in case the proportion is not given, then you have to assume it as in the old ratio. So that is after that I'm going to discuss that only. Variations are now, right? So first of all, here we have to understand. So proportion in which they are distributing retiring partner share is given in the question, right? Proportion is given in the question. Okay. See, I will be solving this with the help of example. You can understand. See here. So what I'm discussing, sir, I'm discussing case number 2. In that, new PSR not given. Under new PSR not given, so we are discussing point number or case number B, when more than two partners are, or more than one partner is gaining partner, right? More than one partner is gain partner, right? And in that, proportion of share gain is given. Proportion of share gain is given to you, right? That we are discussing. So I'm just following a step. I'm writing down step. What I need to do, sir. Step number 1. You have to calculate share gain. Share gain calculation. So how to calculate share gain? So simply we have to use a formula: retiring partner share multiplied by proportion of share gain. That we have to use. Right? That is my first step. Sir, I am applying my first step for solving this question. See the question. Rahul, Ravi and Rohit are a partner sharing the profits and losses in the ratio of 5:3:2. Rohit retired and the share is taken by Rahul and Ravi in the proportion of 3:2. So who is retiring from here? Sir, Rohit is retiring from here, right? And what is Rohit's share? Tell me. What is Rohit profit sharing ratio here? 2/10 or not? I'm audible, Sadhan Shivarish. Rahul, Ravi, Rohit are a partner sharing the profit ratio of 5:3:2. So 5:3:2 means 5/10 to 3/10 and 2/10. Who is retiring? Rohit is retiring. So what is Rohit's share? So retiring partner is Rohit. So Rohit's share is 2/10. So multiply by proportion of share gain. Yes, Shivarish.
Sir, I'm getting the answer, sir, but one simple doubt.
Yes, you can ask.
Sir, we have to add it in the whole share. Then we have to consider each share also. Sir, retiring partner, sir, if
Okay, just wait for a 5 minutes, Shivarish. Let me complete the step. Then if you have any doubt, you can ask me. Right? Is it okay?
okay, sir. Okay, sir.
So my step number 1 is I need to calculate share gain by both the partners. That is Rahul and Ravi. Right? So I'm writing here. I'm going to calculate for Rahul first of all. Rahul's gain I'm going to calculate. So 2/10 multiply by the proportion in which they are going to gain is how much? The proportion in which Rahul and Ravi is going to distribute is 3:2. Yes or no? So 3 is nothing but 3 by 5 and 2 by 3 by 5 and 2 by 5. So I'm applying for Rahul 3 by 5. Same way I need to do for Ravi. Ravi is equal to, what is Ravi's old sorry, what is retiring partner shares? It's same 2 by 10 multiply by, so 2 by 5, right? Proportion of share gain. Now I need to simplify this. So what will be the answer? 6 by 50 and 4 by 50. Yes or no? 4 by 50 and 6 by 50. So this much of share gained by Rahul and Ravi. Any doubt in this first step? That share gain that I have calculated, Sadhana, Shivarish?
Sir, 3 by 10. 2 by 10. Ravi share.
No, Sadhana. What I'm
2 by
calculating,
10. 2 by 10.
what I'm calculating here, Sadhana, I'm considering retiring partner share, and I need to multiply by proportion of share gain. So who is retiring partner here? Rohit. So Rohit share is how much? 2 by 10, 2 by 10. Am I correct?
Okay, sir. Yes, sir.
And then I need to apply the proportion in which they are going to gain this, right? The proportion is 3:2. Understood now?
Okay, sir. Yes, sir.
Okay. So after this, I am getting that 6 by 50 and 4 by 50 is the gain earned by or gain enjoyed by partner Rahul and Ravi. This is my first step. Now, I need to move further. Step number 2. And that is simple. Step number 2. Calculation of gaining ratio. Calculation of gaining ratio. Tell me, what is the gaining ratio between Rahul and Ravi? I'm asking you gaining ratio. Sir, numerator of share gained. Numerator of share gain is my gaining ratio. So numerator of share gain is how much? 6 and 4. Right? So I'm writing here, sir, numerator of that share gain is nothing but my gaining ratio. So therefore, gaining ratio is equal to 6:4 or 3:2. Yes, this is my step number 2. Now, sir, I need to calculate what? So ultimately, I need to calculate what is the new profit sharing ratio. So step number 3, calculation of new profit sharing ratio. So what will be the formula? So formula is their old share plus their share gain, right? So I need to simply put this formula. I need to put amounts into this formula. Sir, for Rahul and for Ravi we have to do, right? So for Rahul and for Ravi we have to calculate. We have to use this formula. Old share plus share gain. Tell me old share of Rahul. So old share of Rahul and Ravi is nothing but 5 by 10 and 3 by 10. Yes or no? See their old share. 5:3:2, right? I can say 5 by 10 and 3 by 10. Yes or no? Sadhana, Shivarish, Pachar. So old share of Rahul and Ravi were 5 by 10 and 3 by 10. So I'm writing here 5 by 10.
Sir,
Yes.
that is why that's my doubt, sir. We have to consider it as 5 by 10 only, sir.
Yes,
Or
5 by
5 by
10.
8.
Yes, no. 5 by 10 completely. We have to consider complete. Old ratio, na? Old ratio for all the partners. By considering the retiring partner also, right? So 5 by 10 and 3 by 10. And in these, we are going to add what? We are going to add share gain. Tell me share gain. Share gain you have already calculated in step number 1. Right? In step number 1, we have already calculated share gain. The share gain for partner Rahul is 6 by 50. and for partner Ravi is 4/50. Right? That simply we have to add 6/50 and 4/50. 6/50 and 4/50. And now we have to solve this. We can solve this by LCM also, right? Give me the answer if I solve by LCM. What will be the answer? We have to multiply by 5 for Rahul now.
Yes, sir.
So what will be the answer?
31 by 50, 19 by
5 5 is at 25
25 plus 6,
plus
31.
6. 31.
By 50
31 upon 50. Here
into 5 by 5.
15 plus 4
19 by 50.
upon 50. So the
Yes.
new profit sharing ratio is
31 is 20.
31:19. Understood? Right? And just summarizing things and so all another 20 here in the PDF. Oh, see, I'm writing here. Calculation of new profit sharing ratio and gain ratio that we are calculating now, that we are studying now, right? New profit sharing ratio and gain ratio. So first case is case number 1 is new profit sharing ratio is given. The simple formula for that, new profit sharing ratio, whenever new profit sharing ratio is given and you have to calculate gaining ratio, what is formula? New PSR minus or new share minus old share, that is the formula. Now second is new PSR is not given. So whenever new PSR is not given, the first case is only one partner is gaining partner, right? So only one partner is gaining partner. So if only one partner is gaining partner, then how to calculate, sir? New profit sharing ratio and gain ratio. So in such a scenario, gaining ratio is always 1:0, right? Because only one partner is gaining partner. And so what will be the new profit sharing ratio? The new profit sharing ratio is equal to old share of old partner plus
share gain.
Share gain, right? This formula we have to use. You can calculate new profit sharing ratio. Now, so after that we discuss case number B, when more than one partner is gaining partner. Is gaining partner. When more than one partner is gaining partner. So when more than one partner is gaining partner in such a scenario, first case we studied, proportion is given, sir. Proportion is given. So proportion in which they are going to enjoy the retiring partner share is given in the question. So if it is given, then we have to follow step. Step number 1. Calculation of share gain. Calculation of share gain. And for this, we have to use one formula, and that is the
retiring partner share.
Share gain is equal to retiring partner share
into proportional.
Yes, multiply by proportion, which is given in the question. Proportion. If you do this, you will be getting share gain.
Share gain.
Yes. Now, step number 2, the calculation of gaining ratio, sir. Gaining ratio. So, what is the answer for gaining ratio here?
Numerator of
The numerator of share gain.
share gain.
Simple. The numerator of share gain is equal to your gaining ratio, sir. Simple. Then step number 3, so we have to calculate now new profit sharing ratio. Step number 3,
Of old profits.
calculation of new profit sharing ratio. So what is formula?
Old profit
share,
sharing ratio
yes, old profit sharing ratio
plus
old
share gain.
profit share, I can say old share, I can write down old share.
Old share
Old share plus
share gain.
share gain. You can calculate now new profit share. Understood, Sadhana, Shivarish, Patsati? This
Yes.
step you have to follow. Okay. You understood?
Yes.
Then we have to solve another question. See this question.
Sir, we'll try or we'll do a
Question is variable. You have to do. Just
okay, sir.
do it yourself. Let me know the answer. If you are not getting it, then I will discuss. Right?
Okay, sir.
Sadhana, Shivesh, Pasha. Let me know once you're done.
Okay. Sir, completed, sir. Sir, sir,
Okay, Shivesh. Then Sadhana. Then Patsati. Okay. Just let me know once you finished.
sir.
Yes. We'll see. Keshav, Kanaya, and Manish are a partner sharing the profits and losses in the ratio of 1 by 2. Okay, parts are the same, answer is 7:5. Okay, we discuss. Everyone is getting same answer, Sadhana, Shivari. 1 by 2, 1 by 3, and 1 by 6 respectively. Manish retired and his share is taken up by Keshav and Kanaya equally. Who is retiring? Manish is retiring. So what is Manish share here?
1/6.
1 by 6. And 1 by 6 share of Manish is taking over by Keshav and Kanaya equally. The proportion is given. Proportion is what? 1 is to 1?
1:1.
The proportion is 1 is to 1. Okay. Find out the new profit sharing ratio and gaining ratio. So first of all, see, money share is 1/6. So we have to calculate first share gain. Step number 1. So retiring partner share multiply by proportion of share gain. 1/6 here, and we have to multiply by proportion of share gain. That is 1/2. After simplification of this, you get the answer 1/12 and 1/12, right? Share gain is 1/12, 1/12, and what is gaining ratio? 1:1. Numerator now.
Yes, sir.
So 1:1. So see, step number 2 answer is gaining ratio 1:1. Now I need to calculate new profit sharing ratio. So what will be the new profit sharing ratio? So old share plus
share gain.
Old share plus share gain. So old share where, see what was the old share? 1/2, 1/3, 1/6. So 1/2 and 1/3. See 1/2 and 1/3 plus share gain. So how much is the share gain? 1/12, 1/12. We have to add that. So after simplification of this, you get 7/12 and 5/12. So your answer is 7:5, and that is correct. This answer is correct. Yes, Sadhna, same answer. Shivari, same answer.
Yes, sir.
Okay, good. Good, Sadhna. Good, Shivari. Good, Sadhna. So now we are moving further. So case number 2 now.
Sir.
Yes,
No
please.
break, sir.
You can take a break. No issues. 8:41. Yes, you can take a break. We'll continue after 5 minutes. Okay. Let me know once you join.
Okay, sir.
Yes. Yes, Shivari, Sadhna. Are you back? Yes. Are you there? Okay, Sadhna. Yes, Shivari.
Yes, sir.
So next is proportion of share gain is not given, sir. Right. So case is the new PSR is not given. That is correct. But proportion in which the old partners are sharing that retiring partner share is also not available. Sir, in that case, we have to assume one thing, that is nothing but proportion of share gain is equal to old share of continuing partners, right? If proportion is not given, so whatever may be the old share, so that old share we have to consider as proportion in which they are going to share the retiring partner's share. Understood? So what will be the steps? Same steps will be applicable. First, we have to calculate. Step number 1, we have to calculate what? Share gain. Then step number 2, we have to gaining ratio. Then step number 3, we have to calculate new profit sharing ratio. Only thing is, when proportion of share gain is not given, older share of continuing partners we have to consider as their proportion. Understood, Shiveri Sadhana? Understood? Am audible? Shiveri Sadhana, am audible?
Yes, sir.
Okay. So in such a scenario, there is no need to calculate new profit sharing ratio as well, right? So their old share become their new profit sharing ratio, and their old share become their gaining ratio as well. See here. When new PSR share gain and proportion of share gain is not given, the new share is calculated by assuming that share gain is the proportion of the old share. Right? This is my assumption. Therefore, new PSR and gain ratio among the continuing partners is the older profit sharing ratio between them. So there is no need to calculate, right? So I can say in such a scenario, whatever may be their older profit sharing ratio, that becomes their new profit sharing ratio, and that becomes their as well. Understood? That become their gaining ratio as well. Old profit sharing is equal to new profit sharing ratio is equal to gaining ratio. Right? See one question, then you will get clarity. Kavita, Rajani and Poonam. Kavita, Rajani and Poonam are partners sharing the profits in the ratio of 4:5:3. Kavita, Rajani and Poonam, and they are sharing the profits in the ratio of 4:5:3. Rajni retired from the firm. So Rajni is retiring from the firm. Rajni is retiring from the firm. Calculate new profit sharing ratio and gain ratio, right? This much of information is available. Then what to do? Sir, whoever the continuing partners. So here, Kavita and Poonam are the continuing partners. So yeah, we have to check their profit sharing ratio. What is their profit sharing ratio now? 4:3, right? So this 4:3 becomes their new profit sharing ratio as well as their gaining ratio. Understood? Understood, Sadhana?
Yes, sir.
Okay. Okay, there is a difference written over here. So what is difference between sacrifice ratio and gaining ratio, right? I have already covered this. See the summary now. I'm just summarizing what we did so far. Calculation of new profit sharing ratio and gaining ratio on the occasion of retirement of a partner, right? On the occasion of retirement of a partner. First of all, first case is new profit sharing ratio is given. new PSR is given. So if new PSR is given, we have to use simple one formula for sorry, for calculation of gain share, and that is the thing what gaining ratio is equal to new share minus old share, right? Then, so second scenario is new profit sharing ratio is not given. So if new profit sharing ratio is not given, then if new profit sharing ratio is not given, then there are two cases. Case number one, what was the case number one? So new PSR is not given. Then proportion of share gain is given, right? Proportion of share gain is given. So if proportion of share gain is given, then what to do? Okay. Before that, I have covered only one partner is gaining partner, right? Now that I have covered, now. What we covered, just check out once again. New patient is not given, only one partner is the gaining partner, that we covered. Yes. Only one partner is gaining partner. So in such a scenario, what is the formula? So in that case, gain ratio is always 1:0. Gain ratio is always 1:0. And what is new profit sharing ratio?
Old PSR plus
Yes. Old
share gain.
share plus
Plus
share
share gain.
gain. Right. Okay. Then there will be case also more than one partner. More than one partner is gaining partner. If more than one partner is a gaining partner, then the case number one over there, proportion of share gain is given. Sir, if proportion is given, then we have to simply follow the steps.
Share gain equal to
Step number one, calculation of
share gain.
share gain. So what is formula for calculation of share gain?
Share gain equal to retained partner share into
Share gain is equal to retiring partner share multiply by proportion. So you can easily calculate share gain. Then step number two you have to apply. Step number two, calculation of gaining ratio or gain ratio. So your answer is numerator of share gain is gaining ratio. So we have to follow step number 3. Step number 3, calculation of new profit sharing ratio. What is formula for calculation of new profit sharing ratio? Old share
plus share.
plus share gain. Simple. Right? Okay. After that, these just covered proportion of share gain not given to you. If proportion of share gain is not given, then proportion of share gain not given. In that case, the remaining partners or continuing partner share, continuing partner share become their new profit sharing ratio as well as their
Gaining ratio.
gaining ratio. Understood? Any doubts, Sadhna, Shivarish?
Not also.
Okay, good.